safeguard purchases of goods and services against deceptive products and deceptive fraudulent business practices. For example, you may not know what that means. For Wells Fargo was fined over $2 million because they was opening up illegal accounts, applying late payments to consumer reports, which in fact is a violation of consumer laws. There are different types of credit that will be on your consumer report. There are going to be revolving lines of credit, which is a continuous borrowing up to a limit. Installment loans are loans such as mortgages, auto loans, and student loans. Secured credit cards is a great way to begin your journey on building your credit if you do not have any credit history. The secured card is backed by a cash deposit by the cardholder. So if you do not have a credit history or do not have an authorized user to extend you a line of credit to start beginning your credit journey, you'll want to take advantage of the secured card. And you can open up that at a financial institution or maybe Capital One, Premier Bank. Those are subprime lenders that will help you build your credit score. There are great benefits of good credit. You're going to be able to have access to loans and mortgages, lower interest rates. Interest rates is important when it's time to do business. It's important that you take out your calculators because the interest rate is based upon a 580 credit score versus a 700 can cost you or save you thousands of dollars in the life of that loan. So the benefit of good credit is you're going to be able to have access to capital, borrow at a low price with the terms of paying it back. You're going to be able to get credit rewards, which in fact you're going to be able to take advantage of free perks that's flying for free cash rewards. So FICO is a number between 300 and 850 that determines your credit worthiness. If you're under 3, if you're under 500, credit improvement is definitely needed because you're definitely going to get taken advantage of. People who have a lower credit score is a victim of bad credit because you're going to pay everything more, like almost 3 times just because you have a bad credit score. The payment history is important. It's 35%. Some people may have late payments on your report. If you get hit with a late payment, your score is definitely going to drop 120 points minimum, and it's going to take you between 9.5 to 10 months just to regroup for that late payment to not to affect you anymore. And you don't want to get late payments because you're going to be looking for funding to other lenders. So if you're getting 30 days, 60 days, 90 days late, you're putting yourself at a risk at a higher level of your application being denied because of your credit history. Your utilization, you want to keep your utilization under 30% on each card if you're using personal credit. Personal credit and business credit is different. Is there any entrepreneurs in here? Okay. So what I suggest as an entrepreneur, once again, credit is one of the most valuable tools that you can have. And to fund your business, you want to make sure that you're in good credit standing so that you are able to capitalize, maximize on your purchasing power with building your business credit. Business credit does not report to your personal credit, so you're not going to be penalized if you overuse at 30%. You can max out your card and repay it in full without having adverse accounts. That's the difference between business credit and personal credit. We're going to talk about age briefly, which is 15% which is roughly 82 points that you can possibly gain or lose. Your account is considered seasoned once you hit 2 years. So once you hit 2 years, when you have the same trade line, that's considered a seasoned account. And what's on that seasoned account is what's your payment history? Are you paying on time? That's considered a seasoned account, and it's going to open up other primary accounts, which will give you higher credit limits as well. The mixed credit is 10%, which is 55 points, and the inquiries. The thing about inquiries is they're small, but they can definitely cost you a denial because you don't want to have no more than 5 inquiries on the report within a 2-year time frame. Applying for 2 new lines of credit in a short period of time makes you a risk to other lenders as if you're looking for credit, begging for credit. So you want to make sure that you're timely when opening up new accounts. And once again, the role of the consumer reports, we all probably know it as a credit report, but it's considered a consumer report. So knowing the proper terms and understanding simple words can definitely change your financial health with using consumer laws, because it's a lack of information that we don't have that people have that are going to be using against you because you don't know this information. So this is going to be detailed records from all of the credit reporting agencies such as Experian, TransUnion, and Equifax. There's SafeStream, there's Innovis, or Logic, LexisNexis. There are other small consumer reporting agencies as well that store your data that reports this information to the major consumer agencies, which in fact, it could be hurting your report or it could be helping you. Adverse accounts are accounts that are in negative standing. You don't want adverse accounts on your report because it's going to lower your credit score. Collections, charge-offs, late payments, repossessions, bankruptcies, child support, foreclosures, liens. Those are just a list of few of the accounts that may be on your consumer report, but could be hurting your report as well. But that's okay. We all have financial hardships. Things come, but once you know the information, you're able to move forward and not continue to be in a financial crisis. We're able to get the adverse actions accounts removed from your reports by using consumer laws. What many of us may not know is that a consumer, which is all of us, we have the right to stop paying on any debt. If we inform a debt collector in writing that we no longer want to pay that debt, that is official. Statement stating that you are not liable for that debt. So if you just take a simple letter to notify that you want to cease and desist, these to prevent these negative accounts hitting your reports, which could take years to recover from. So in general, we want to talk about how much is your credit score costing you or saving you. You can just ask, do you think your credit score is costing you? Do people in your know where your credit rating is standing at today? Have anybody do their credit report before coming here? Excuse me? Okay. Yes. So where are you getting your? Is that by the reporting as to how the budget reports you get or whatever? financial score are two different scoring modules, so they're using a different scoring factor. So that's why Credit Karma or Credit Score Sense or another third-party reporting agency, you may see a different in their points. I suggest you use FICO score because that's what most of the lenders use when it's time for looking for funding. They use FICO 810. So managing your credit health it's very simple. Managing your credit health is just actually taking action, getting started, doing your report, know where you stand. There's no credit score that is too low that can't be raised, and there's no account that can't be deleted using consumer law. So now is a great time to take advantage of your financial health to be able to open up doors and other opportunities. Once again, we're going to talk about responsible borrowing, and that's just making sure that you're not borrowing more than what you can afford to pay back, or more than what you agreed to pay. If there's an error on the report, you want to make sure you dispute that, because any inaccurate information, once again, will be able to drop your score or be able to deny based upon the information that is reported on the report. In disputing, you do have 30 days to dispute any inaccurate account that's on your consumer report to the consumer reporting agency. And the dispute letter is pretty much, if you use consumer law, you're going to be able to get that account. The long-term benefits is going to be building and maintaining good credit. It's a long-term process that provides significant financial benefits, and it's an empowerment, understanding and leveraging the power of credit. So it's knowing what you're doing with your credit, with your credit score. What are you using your money on? Are you buying assets or are you buying liabilities? Are you purchasing good debt? Or are you purchasing liabilities? So with credit, it's still about financial literacy, knowing what to do with your money and how to generate more income, which will become an asset instead of a liability. So I told you guys, I'm not going to keep you guys long. I'm going to open up this time for questions. If anyone has some questions, I can answer. Like I said, now is the time to transform your credit. It is the perfect time to unlock your financial potential. It is a lot of opportunities in the banking system that they have dropped the credit score at an all-time low to give away money to borrowers. It's a 580 minimum credit score for an FHA loan. That has been the lowest credit score for loan approval on a home in history. Huntington Bank, they're doing a $150,000 loan, and their credit score limit requirement was $585. I mean, 580, a 585 credit score. Pardon me. So, what we want to do is we're going to open up the floor for questions. If anybody has any questions. Yes.
What is it that you do?
What is it that I do? I actually transform your credit score. I take the people who have been told no because they didn't qualify, and I run through our credit repair process, and then we get them approved. So we turn the no's into yeses.
So, this is possible for anybody to do like a one-on-one, to say you do that to help people build up the credit score?
Yes. So in the folder, if you now receive the folder, it will have my contact number, and if you want to schedule a one-on-one consultation, we would love to assist you to be able to begin the journey of better health and financial. Is there any other questions? Yes.
So one of my questions is, what is the quickest way to rebuild your credit?
That's a great question. So charge anybody who does not have a credit history, that's a one profile. I would strongly suggest you put up, invest a small amount of $600, $500 into two secured lines of credit. One secured line of credit can take you to a 300 score all the way up to an 850 if you apply the rules right, which is keeping the utilization down under 30%, paying your bill on time, and that will definitely keep you to that high credit worthiness.
You all have questions, you know, have to get you on the mic because a lot of us can't hear. So if you have questions, raise your hand and then you have to take the mic.
Yes.
And you have to stay over
Yes. So is there any other questions? Yes, sir.
I have a question about the consumer law. You said, I got this bill that I'm tired of paying. You said I can do the letter and say, I'm not paying, I want to pay it anymore. I want to know how that's going to work. Good question, good question.
Let's talk about how we are not able, if we want to stop paying on the debt. So section 15 USC 1681 states that all you have to do is request to stop payment in writing, and that will eliminate that debt. That's the first step that you have to do. When you stop the payment in writing, that's going to prevent the collections and the repossessions of any of the assets on your accounts, because you're giving them information, fair warning up front, that you're no longer pay this debt. It's no law stating that we have to pay our debt, and I'm not saying don't pay the debt, but if you choose not to, do it the right way, just send them a letter and tell them you're not going to pay in writing. So what's the negative downfall of that? By not paying. The negative downfall? There won't be a negative downfall because you've already followed the procedures by law. So the first thing is you write the letter. By writing a letter, that's going to stop all actions. They won't call you. These are laws that you can look up yourself. So they won't have the right to call or collect that debt anymore.
Does this have to happen before it goes through the election process? Because a lot of these companies, they can still garnish you, to the punishment, regardless of you telling them that you don't want to pay it anymore, because it's based on their actual contract for their credit card or their loan, that if you don't pay, they can go after you. So writing a letter, how does that solve that issue where people already basically, it's in their contract?
That's a great question. So the thing about, once again, with consumer laws, when your account goes to collection, you have an account, you had a contract with the previous furniture. For example, we're just going to use Verizon. So if you have a contract with Verizon, you stop paying it. For one, it may go to collection, or they may charge it off. So if they charge it off, they're getting a tax break once again on the tax end, and then they're selling the debt to collection. Now, where you're at, where you're not going to pay it because you don't have a contract with that original collection agency. You don't have a contract with the collection agency. You have a contract with Verizon. So that's the third party, and with consumer laws, that could be removed. If you do not, if they send you a letter, that is your responsibility to open up the letter. All you have to do is simply respond. So you get garnishment by not responding. So they win by default. So when it's time to challenge a collector, you're supposed to stand strong and know the law and respond. And that will eventually be a dead win. They don't even go to court. I did. Judgment stops all the time. So collection, they only garnish you if you fail to not show up in court if you fail not to respond. You don't have a contract with the collection agencies, nor did you give them permission to report that information. So once again, when it's using consumer laws, knowing that you have the right to privacy, knowing that you need 3 disclosures before someone puts any information on your report, you have to be able to opt out. So a lot of consumers don't know that because they don't tell us this information. And they don't tell us this information because they're making more money off of someone who can get charged at 18, 29% interest rate because they don't even know. So it's all about using the laws to your advantage and improving your financial health. Did that answer your question? Is there any other questions? We do charge a fee for a service. Every profile is different, but however, what we're going to do today or this evening, since we're all friendly, if anyone do need services or need to look on to see how to improve their financial health, you can definitely open up the folder, it's a card in there with our contact number. You can schedule a call and we can definitely be able to assist you. You will get an extra 35% off because you're members of Freedom Faith Church. And you're definitely, well, bless luck. You get your credit score up, you can go to the bank.
There you go.
Is there any other questions? Yes, sir.
You mentioned business credit for the entrepreneur. You guys help build with that. I recently started that journey. So I'm just wondering if you guys can assist with that locally instead of doing it for the national.
Yes, we can. We will be able to assist you on your business credit, but like I told you, your personal credit is important. You're going backwards if you're trying to build business credit and you're not credit worthy. When you build your personal credit, your business credit will be easy. It'll just be a signature. You'll be able to personally guarantee it without your credit score is that collateral. So that's how powerful your credit score is.
If you choose to close a credit card on your own, just don't want to do it, does that have a negative impact on your credit?
That's a great question. Closed accounts. Remember, you get a percentage of your points by the lines of credit. So I understand most people, they close their accounts because to reduce the debt. But if you keep that account open and just keep the utilization low, you're still going to be able to have positive credit history. Because when that account is closed, you're not going to have that account is not going to be reporting positive information. So it's going to be at a standstill. It's going to be closed, and you're not going to get any positive points in there. So I would suggest that if you're on the move to get your credit score up as high as possible and to be able to leverage it, I will keep your accounts open, but minimize the utilization. You don't have to max out your cards, or you don't even have to use the cards, but you can keep them open instead of closing them, so you can still use your credit if you need it.
So the school is still open, and I don't use it. So I'm like, should I just go ahead and close it out, or just leave? Just let it sit there idle for 2 years.
So I would suggest that you keep it open because, once again, for some people, you're taking a risk that the financial institution, that they can deactivate your account. So if they deactivate it and you want to keep it open, you're like in a lose situation. But if you control your consumer report, so if you want to keep that account open, I would suggest you just still use at least 3%, and then just pay it back. You don't have to, you don't have to use a lot. You just want to show some activity because the financial institution will lower your limit and they will close your account as well.
If I'm saying this correctly. So it appears that one of my credit cards increased my line of credit, just because they wanted to ask for some. But if I'm looking at it correctly, it appears that my utilization went up and it's affecting my credit score.
All right, so my question to you is, when your credit score, when they increase the limit, how much utilization did you use? So once again, the utilization is how much you're using on that available credit. So if your limit is, if they increase your limit to $1,000 and you're using that, but you have it at 800, you're already over that 30%. So just because you're paying the payments on time, you're over that 30% utilization. And one thing that's important about credit card is understanding your statement date. A lot of people just look at the due date and just pay the minimum payment. The key is the statement date, because the statement date is what reports to the consumer reporting agency. So if your statement date in that balance is at the lowest as possible, you're going to get the most points. So just let it, if you're on a revolving line of credit, I would suggest that you wait for at least 3 to 5 days before you're using that, so it can be updated through the third-party consumer reporting agencies. Because if you pay the balance, even if you pay the balance, but if you use it the next day and it had not been reported, you're not getting your maximum points because you didn't give it time to report. So the most important, yes. So the most important part is when you're trying to get points, is two. It's the utilization and it's the payment history.
So I have a few credit card accounts that's been closed. So is that affecting my credit on a negative basis?
That's a great question. So with those accounts, they will affect your credit score. They will affect your credit score depending on how it's being reported. If you have a closed account and you have missed payments, that history still reports. That history is still there. So if there's any over the utilization, if there's any adverse accounts on that, it will affect your score. You're welcome. I have had a using like Afterpay and Clara to make small payments, like in a quantity of 4. I noticed when I pay those payments off that my points go up. Is that a secure way of getting your points up? It's not a secure way of getting, that's going to be considered an installment loan. So that's an installment loan and you are getting your points because you're paying that security. A secure card is when you're putting your money down and you have to put your cash money down to be able to have access to that card.
What about dormancy accounts? Because I've had where I had cards that I didn't use, and then you see that everyone else saying, like, you know, this is card within 6 months, we have to close it. And it might have had a high limit on it, which does help my credit score because of my availability. But if they close because of dormancy, would that affect your credit too?
So that will affect your credit because that line of credit is no longer reporting on there. So it's just affecting it if you're not using it. You can get any account deleted. Auto loans. One thing we're going to talk about, briefly is auto loans. Auto loans, and if you guys are shopping for cars, it is important that you want to be in good credit rating because when you go to a car dealership and you have less than perfect credit, your credit score is gonna get ran 10 times through different lenders. So you're gonna have 10 inquiries on the card, you're gonna need a down payment, you're gonna get hit with a finance charge. A finance charge is an insurance policy that is already built in just in case if you default. So once again, bad credit is one of the biggest business in America because they're getting paid off the finance charge when you default. They're sending it to collections, they're charging it off, and then they're going to try to punish you. And these are simple ways that you can prevent subprime lenders taking advantage of you. And that's just knowing, hey, knowing where you stand with your credit rating. I have a 700 credit score. I'm not putting any money down, and I don't want 10 inquiries on Google report.
When applying for mortgages or rental properties, you know, they get hard inquiries. How do you, put some pricing? How do you make sure that you're wise as far as I don't want my credit score to decrease by a lot by, you know, applying with all these different people? So how do you stop that?
That's a great question. So before you guys look for funding or financing, where you want to call ahead. You want to ask them, what is their requirements? What is the credit score requirements? What consumer reporting agencies do before front? Just those two simple questions is going to tell you, so that's going to prevent you from having your credit pulled multiple times because you're going to already know where you stand at. That's your leverage, knowing your information. You're going to know what score you have, so you're going to know if you're going to be approved based upon your profile. And so you can ask questions as what a person on your account that to stop you from getting approved. If you have those questions out, then you want to look back at your consumer report and then look detail to make sure that none of those adverse accounts are on your report, so you'll get approved.
Because, I'm just saying because I work at a credit union, and that's what I do loans. But it's always best to get pre-approved to your bank or your credit union you have a good relationship with, because they're forced to bargain too also when you go out, and that saves on getting your credit report pulled with all the different banks and relationships that the dealership had a relationship with, and that's where you get all the inquiries, because they're going to try to get you the best loan with the best financial loan. So go get 10 inquiries, because they want to find out what 10 people will give them that kickback as well if they finance through them. And that's where you see it. But as I was told, and I don't think it's much truth to it, if it's all in one day, it doesn't bring your score down that much when you're looking for to purchase a vehicle. But I don't find that to be true, because if you went 10 different places in one day to pull my credit, at some point over that 30-day period, it's going to drop. So it's best to be pre-approved so you don't have that issue of that inquiries, a lot of inquiries.
Thank you so much. Thank you so much. Is there any other questions? Well, I want to thank you guys so much for your time. I hope this session was informative. If you guys need more information, the card is in the folder, and I'll be looking forward to assist you guys in a significant key.
Can you share the web? Miss Renee, can you share that website they can check the credit score?
Oh, yeah. So, for those who need to know where to pull your credit report, annualcreditreport.com. You want to make sure you go to Annual Credit Report official site. It's a lot of third party. So it's annualcreditreport.com. You're going to be able to do that for free. You want to make sure that you do all three of them, so that way your credit report is in all areas, not just experiment. Yes, ma'am. No problem.
Can you have medical bills that
What is the dollar amount?
It's not mine, it's not something, I don't know.
Okay.
It's from my
Okay, I was asking the dollar amount because it was a new law that was revised that medical debt under 1500 is not supposed to report to the similar, report 1500. So once again, you can definitely get medical debt, any account that you do not want on your report, you can have that removed.
I didn't hear what you were saying.
Oh,
Under 1,500?
1500 is the new revision where medical debt is not supposed to be reported. So if you have medical collection under 1500, it doesn't supposed to be reported. If it's over 1,500, we can still get that removed, but it's the law that just was removed, that was just revised not too long ago. So some people may have, collection, medical